Mike, what do you think about Donald Trump's more conciliatory tone that he struck really, I think, all weekend at the G7, and he now seems to really want to make a deal. Does it matter at this point?
I think it matters hugely if we get a deal. I think what the global economy really needs at the moment is for the trade war concerns to go away, because I think the problem is that there's a non-linear development in terms of how, as the trade war escalates, it has a more and more problematic impact on the global economy. So look, whether or not these latest comments are going to come to anything, I think, is anyone's guess. But clearly what the global economy needs is for the trade war to dampen down a little bit and to take a step backwards. Now, I think it's almost impossible to trade that, because one moment it looks like things are getting better, and then the next moment it looks like things are escalating again. And so as a result of that, I think a more neutral approach to risk assets at this point matters, because were trade tensions to escalate further from here, I think it risks tipping the balance for the global economy to one where the risk of an economic downturn would rise quite significantly.
Is trade right now, Mike, more important than central bank, than monetary policy? I mean, is the trade story more important than the Fed for markets?
I think so. I think, unfortunately, we're in a world where the central banks can react to the deterioration in global growth that's taking place, largely as a result of the ongoing uncertainty that's impacting businesses and then, to an extent, consumers because of the ongoing trade war. But if trade escalates further, if we get to a world, let's imagine, where you had 25% tariffs on all of China's exports to the US, then I think, unfortunately, at that sort of level of trade war, it would be very difficult for the central banks to offset that. So we can't rely too much. I think the market at the moment, the equity market certainly, is assuming that the central bank is going to ride in and save the day. I think, unfortunately, if the trade war gets worse from here, then it's unlikely that central banks are going to be able to bail the equity market out.